Stagflation reared its head again in New York last night with the Nasdaq down 1.7%, led by the AI computer chip company Nvidia, despite announcing 2 new chips and a plan to supercharge humanoid robot development. Can't wait for that, can we? Anyway, the problem is that everyone has cracked the glums over there because of tariffs and government austerity. Here's NAB's attempt to figure out what all the stuff going on in the US will do to GDP. Current tariffs about 0.5% down. 10 percentage point lift in the average tariff, another 0.5%. Federal government spending cuts, about 1/3% of GDP. And the extra tariffs apparently coming on April the 2nd, maybe, who knows, close to another 1%. Total drag on GDP about 2.4%. Current growth is 2.6%, so not quite recession, but a big slowdown. There probably is waste in the vast US government for Elon Musk to cut, but it's not a big share of the economy, less than half what it was in the 50s and 60s. So that's the stagnation part of stagflation, and here's the inflation part. Inflation expectations are surging because tariffs go on prices and expectations become self-fulfilling. The local market followed the US lower. WiseTech fell 2% or so after the board released an independent report into the activities of founder and CEO Richard White. It found he misled the board, failed to disclose conflicts of interest, and went beyond his authority. But it was the board that went, not him. On commodity markets, iron ore and oil fell. Copper and gold went up, with gold consolidating above $3,000 US, and the Aussie dollar was steady in the mid-63s. And that's finance.